Good weekend, all. Ira Epstein with your metal market update, and this update is for the weekend, and it's our weekly edition of the metals for this Sunday, and we're at the 15th of May, 2022. So we'll start off with gold on a monthly chart. This is where your first major support on a monthly chart is. Right at the 18-month moving average of closes, 1820. You're $12 under it. You hurt this chart if you break under the low right through here, and that would be this number, which is 1750.390. Not breaking under that keeps the overall uptrend on a monthly basis intact. You do have momentum pointing down, bias down, trend up, and you're stuck in a sideways consolidation area. I think that's crystal clear to see on the monthly chart, the upper and lower Bollinger Band area. On a weekly chart, you lost another 3.96%. You've come down hard from the 1985 area, down about, $177 roughly, all the way to 1808.20. When you take a look at the chart, how it's come down here, away you go. You can't argue the fact you have a Ukraine war, you've got inflation, and gold's not holding up. Why? Because banks are raising interest rates, and the headwind of getting paid to own currency, sometimes the dollar just is the big headwind for this because gold is priced in dollars, makes it difficult. Once you're at 3% returns that you're getting and you're getting nothing on gold, it has to be some other element that picks it up, and we have those elements, and it's not going up. Am I in the bull camp? Absolutely not. When you look at a weekly chart, the market fell apart after it got back up challenging the 2000 level and got back under 1888.30. It hasn't looked upward, north whatsoever. What about support zones? Well, you just slid through the 100 week. So that opens the number for two numbers on the chart. One number, 1624.60. The 200-week average, I don't know. As I said on the monthly chart, it's going to get hard to get under 1754. And that means more likely, if the market breaks further, the 1770 level, which ties in with the monthly chart, would be the next support level. In addition, I teach that the first time you hit upper or lower Bollinger Bands, pros take money off the table. Now, if you get a big, broad range, that's even more valid. When you narrow the markets up like you did right here into sideways action, it is important. They're still going to do that. But the market's coiling, getting ready for a breakout one way or the other. And when it happens, you carry. Well, now, because the market is dropping the way it is, I don't expect that if it got to the lower Bollinger Band, there'd be a lot of carry. You have momentum pointing down, bias down, not trending. The gold-silver ratio, silver's still getting hurt. However, there is an event you have to pay attention to, and it could be the change where this happens. China is getting ready this week, I think it's the 20th, to lift the zero-tolerance policy in Shanghai. Today they announced they're going to do a bunch of bank plans to get people back to work, low interest rates, lowering all kinds of barriers. In other words, adrenaline for the economy. They have just destroyed the economy with this stupid, I want to use it in key words, stupid zero-tolerance policy. You will see their good friend and neighbor, North Korea, will do the zero tolerance too. They're already a broke economy. God knows what that's going to mean for them. And China's not in the best place to go out and support them. This is crazy when you don't pay attention to modern medicine, or your own medicine doesn't work and you decide that you're going to stay within. Even though mine doesn't work, I'm going to prove to the world how good it can be. Well, it's not working. In any case, they're getting through that hurdle, coming back. That's good for the whole world. That means you're going to get business coming and bids coming back into iron ore, copper markets. The supply chain starts to fill again. This doesn't happen on May 20th. It is the beginning of it happening, so it's hard to keep pressing the short side of the market knowing that giant is getting ready to turn things around. That makes me think in the silver that between the Bollinger Band and the 200-day average, time to call it a day. That's just my opinion. Copper, same thing. I have told my traders and been telling my subscribers, let it fall, let it get to a ridiculous level. It'll offer us an opportunity, because at the end of the day, they're going to go back to filling the supply chain. At the end of the day, whatever kind of country they are, they need foreign trade. That's what they thrive on. They need the money. They need to build. This idea they'll build from within doesn't work either. They're too big. That's what's going on within all this. So be careful. It's just the beginning, but it's something to pay attention to. In the platinum market, well, you're still down, trend down, but you're into support between the 200-day average in gray here, the dashed black lines with the lower Bollinger Band. I don't think professional money's pressing the short side there. What if I told you 9 weeks in a row, if you're up this week, in the dollar index? That's the most I've ever seen a Bollinger Band stay in a lead currency out of it, would be that, 9. So we'll see if the market can do it. It's at 8 right now. I've seen a 9 once before. I forgot where, but when I was doing the original analysis and study for it, it didn't matter. I don't want to keep the records like that. You know, I'm not going back to say, oh, this exact thing happened in 1964. Who gives a damn? All right? It's a stretched out. It is bullish as can be. Pullbacks in the market, they're going to be not as big as you think. This type of power's got the shorts going, ouch, ouch, let me out of this. So on the breaks, they're going to go, let me cut my loss. That's how that type of thinking goes. You know, I explain all this and so much more every morning to you. If you think these free videos offer you something, it is this by my design. You are not getting the full picture. You're not getting buy here, sell there. This is where you go in. This is your stop order. Here is why. There are many things I intentionally leave out in these. This is the feeder for what is the gravy train. The gravy being everything. So you get, first off, if you look, you get window envelopes. You don't see them on this. You're going to get moving averages you don't see on these particular charts. You're going to see how to put them together. You're going to get the technical analysis, the fundamentals. Yes, the fundamentals. We'll talk about them every morning from Asia, Europe, back to America. We cover all these markets and futures, and I cover in the ETFs, spiders, and stocks. Stocks as well, everything in the ETF. So I cover the whole package for you. It's simple to find out about it. Why don't you at least take a look? To take a look, all you need to do is go to www.iraepstein.com. That's all. Take your cursor. You can also move it right up here. The icon will appear. Click it on. It'll take you right to that zone. In the meantime, I am Ira Epstein. You have a great day, and I'll see you in the morning.